Good morning, all. CamelbackTrading.org coming to you this Wednesday morning, February 14th. Happy Valentine's Day to you and yours. We're looking at Window Trader's market profile of the ES and the NQ. I'm leaving early today, between 2:33. Afternoon video will be done, but just later than usual. So yesterday, a lot of emotional selling, large gap down, wiped out a bunch of week longs from the previous 4 or 5 days, puts the daily back to balance. ES takes out last week's low, barely, but they're firmly in balance because of that. SPY did not, and neither did NQ or triple Qs. They did not take out last week's low yet. Now, these gaps are very large. The odds of them being filled the first time into them today, I don't think are good. To fill these gaps, I believe you're going to need a trend day up. I don't think you're going to be able to slow grind it. It's possible, but I would think if you're going to fill the gap today, it would be done with at least single prints starting to go fill it. I'm not saying the trend day would hold, because we know the history of those, but I think you would need one at least to get going to fill this gap. Decent volume yesterday, our third heaviest, but not the kind of volume, it was 113 million or so. You'd like to see 150 million or more if it's real selling. Range was good also. Game plan for this morning. Well, we're gapping. Well, I shouldn't say that. There's 70 minutes to go. We're attempting to gap higher into a large gap. So the emotional trading continues. Which gap would hold today? Well, even though you might open with higher value, I'm going to lean on the fact that today's gap won't hold rather than it holding and refilling yesterday's gap. Be a little surprised if that happened. So, again, we're going to see how big today's gap may be if we have it. Right now, it's only about 8 handles or so. Now, if the gap doesn't hold, doesn't mean you can't look for a long. This is a very visual area here because yesterday's high and value high are pretty close. So right now, bulls are trying to start with higher value. That's something that's going to be in their corner. They want to hold that. They're up 0.5% now. If they were to hold that, that would go in their favor. But any gap fill and acceptance back into yesterday, you got to be very careful. Why? There's nothing inside of yesterday. There's a price vacuum. They attempted to go trend down. They attempted to price spike, only to have M period take it all back. And now look where we are this morning. Now, again, I'm not really surprised. The bigger picture, the bulls are still in control, right? The monthly is very healthy. The weekly is healthy. It just came back to balance. And so did the daily. So it doesn't surprise me we're going to try to take this back. But as far as intraday traders, which we are, we have to focus on the fact that if this gap fails and we get acceptance into yesterday's range, not much to lean on, except the overnight low. So that's one thing to keep in mind. Where can you take a short if this thing does push higher? Well, I don't know if I would rely on yesterday's halfback in the overnight. We do have a 12 wide POC all the way up at 11.50. That's a decent risk reward short. Still $2 to the gap fill. So that might be a short the first time it got up there if it happens in A period. Again, if A period's trading around here and then B one-time frames up, well, now we're holding the gap. Well, if we're holding the gap and you're one-time framing, that might be a little less likely. So, again, those are all things to keep in mind. But that might be a decent risk-reward short the first time if it got up there. As far as a long, again, if it pulls back, if we got the overnight high and pull back and fill the gap, that's not a bad risk-reward long, and you can get out, say, below where our afternoon rally high was, right? Right now, we're taking that out. So that's a decent risk-reward if you long right above E's high, out below G's high. That's if you get the overnight high. If we don't get it and we come back down, I might still take that trade, but with a little less confidence, because if you get below G's high, good chance you can go get the overnight low. Okay? Pretty much the same scenario here in NQ, too, that we just described. As far as righty goes, their whole overnight is inside of yesterday's range. However, they're starting to tick up as they get closer to yesterday's high. We all have rather large gaps. Okay, so keep that in mind. And then on the chart, so our monthly, here's our weekly. SPY did not take out last week's low yet. So they're still up. They're still one time framing up 6 weeks. ES just came back into balance. It's like this week. Remember, SPY never took out that weekly low. ES did. And then they had an outside week up. And then they went bull again. So it's healthy. It's still healthy. So the weekly is balanced ES up on the SPY. And the daily, remember, markets don't go bull bear. Now, people say, what are you talking about? We're definitely down. I don't look at it that way, right? We were just one time framing up for how many days? 3, 4, 5, 6, 8 days. Markets don't go bull bear. All we did was come back into balance yesterday. If we take out yesterday's low, then I'm firmly down on the daily. If we take out yesterday's high, I'm still firmly balanced on the daily. That's how I think you should look at a market, okay? Anyway, thank you for liking and subscribing to this channel. Good luck trading today, and we'll recap at 4 p.m.